fines.
Coming so soon after banks were hit with fines over rigging of LIBOR, the latest revelations that traders colluded to fix the currency exchange rates was particularly embarrassing for the banks. Questions were asked as to whether the industry learned anything from earlier scandals. Banking expert and founder of the Financial Services Club, Chris Skinner, thinks this is probably not the last fine to hit the industry.
Is part of the shakeout of the last decade of corruption in the banking system, and we've seen that with the interest rate rigging in LIBOR. We're now seeing that with FX markets. We're going to probably see that with gold and oil and other markets potentially over time. And it's basically that if there is an opportunity to distort markets to one's own gain, then in the last decade, some of the banking trading desks were doing that. Will they in the future? I would be very surprised if they would entertain such notions, because it's now viewed as untenable. And so I think these fines will certainly change attitudes. Whether it can change the whole operation overnight remains to be seen.
Chris says that this is probably, for the US regulator, the last chance for some of the banks.
It should draw a line in the sand, and the real question is if any of the banks step over that line in the sand after that has happened, then there really is an issue, because right now, we've seen the US with money laundering, for example, almost breaking some of the banks like BNP Paribas with fines. If you stepped over that line again, then I think they would break those banks.
Wealth manager Jonathan Davies is surprised at how the fines for rate rigging have been skewed away from the US.
I find it very interesting that I haven't seen any American banking names being had up by the beak, as it were, for wrongdoings. It seems to be only non-American names, as in British and European companies. So there's a question to be answered by the regulators. Secondly, this indeed will be water off a duck's back. It will be a cost of doing business, according to the banks. It's a very, very small percentage of the size of the firms, of their balance sheets. It doesn't affect them at all. I tell you, if I were in the executive shoes, I would be viewing this merely as a cost of doing business, which is absolutely horrendous, of course, because we're talking about criminal activities. And when you think about it, Billy, where are the prosecutions of the senior managers? Where are the criminal prosecutions of the actual individual perpetrators? There aren't any. So the regulators and the government have a lot to answer here. All they're doing is, in effect, taxing the banks for criminal activities. Quite outrageous as far as I'm concerned.
There are people that think that the regulators have not gone far enough. Jonathan is one of them and would like to see bigger changes forced on the industry.
I would bring back a thing called capitalism, and I don't say that lightly. What I mean by that is I would prosecute the bank generals, the executives. I would prosecute the individuals actually perpetrating these crimes. I would also ban bailing out of banks which have been involved in criminal activities. And I assure you, if either of those policies were actually implemented, then you can take it as read. Criminal activity would stop yesterday.
Chris, on the other hand, thinks the bigger fines do have an effect.
Certainly, if the fine is bigger, it makes the bank stop in their tracks and think about it. And I think what's going on right now in the US is that there's still a superpower with the reserve currency status that allows them to dish out these big fines on overseas banks whilst being quite beneficent to their own banks for the same crimes. You may not have noticed that most of the large American banks haven't been slapped with large money laundering, interest rate rigging fines in the same way as foreign banks, because they're slapped with big fines for domestic mortgage foreclosures and other things that are domestically vote winners for the president. So, when China starts to play its cards, and eventually it will, it'll be interesting to see what happens between the American status and impact on financial markets versus the wooing and romancing of the Chinese.
While admitting guilt may speed up the process, Chris doesn't think it'll do much for the bank's public perception.
To a large extent, the public don't particularly give a thought to these fines these days because they've become so regular and frequent. They just assume that all bankers are criminals and eating at the gravy of the gravy train as fat cats or whatever you want to think of them. Having said that, those that are in the industry, the corporate treasurers, the investment markets, do understand the vagaries of these markets and the ability for things to be distorted, and would probably actually respect more the banks that are transparent and open and admit culpability, rather than those that try and buck the issue and say that they didn't actually have any involvement and then are found to have had some.
While it is slow, change does seem to be happening. Banks are cracking down on the use of chat rooms and more closely monitoring staff. Though lack of arrests will leave some feeling like justice is yet to be served, the banks will be keen to avoid this kind of penalties in the future.
And that was Billy Bambrough reporting on the reaction to the latest FX rigging banking fines.